Everyone wants to make money in the stock market. And if you search for how to make money in the stock market online, you'll find countless videos and blogs with gurus telling you how to do it. Maybe you've even watched their content and taken their advice, only to realize that it's not as easy as it seems. And that's for a reason. But first, hi, I'm Brian. I'm a passive income investor and the author of Passive-ish Income, a free weekly newsletter about how to build a passive income portfolio in your spare time. I've been investing for over 10 years now, and I've made and lost a lot of money in that time. Which is why today I'm going to flip the script and tell you exactly what I would do if I wanted to lose money in the stock market.
What do you mean by that?
Now you might be wondering, what do you mean? I don't want to lose money in the stock market, and that's the point. This video is based around inversion thinking. Using this approach, you think of all the things you would do if you wanted to fail, and then you avoid doing those things.
No, I don't think I will.
And successfully investing in the stock market is no different. The truth is, many investors struggle to make money, and even when they do, they struggle to beat the market. And that's usually because they're following one of these 5 tips on how to lose money. So my goal for this video is to outline those 5 key concepts and help you avoid them so that you decrease your chances of losing money in the stock market. Stay tuned for later in this video where I'll turn these 5 losing tips into 5 winning tips. So tip number 1, if I wanted to lose money in the stock market, I would invest my entire portfolio in just 1 to 5 stocks at a time. The goal here is to make sure I have as much exposure to the risks of a single company as possible. That way, if something horrible goes wrong with this company, if they get sued, if they go out of business, if it turns out they've been committing fraud, my entire portfolio goes down with that company. But that doesn't mean I don't invest in other companies. I do. Which brings me to tip number 2 if I wanted to lose money in the stock market, is that I would only invest for the short term. I would spend all day buying and selling stocks seemingly at random, and I would give myself bonus points if I joined some sort of chat room or asked ChatGPT what I should be investing in every 5 minutes. This way, even if I do make money from this strategy, I'm going to get taxed at the short-term capital gains rate. This means that all my earnings from the stock market will be taxed at my personal tax rate instead of the long-term capital gains rate of 15 or 20%. And I won't stop there. I would take it even further with this next tip. Tip number 3, if I wanted to lose money in the stock market, I would trade lots of options. Options are also called derivatives, and options give you the option to buy an underlying stock at some point in the future. These options are also based on a strike price, which means you can only buy those stocks if the stock goes above that strike price. In order to lose as much money as possible, I would buy lots of short-dated options with strike prices way higher or way lower than where the stock is currently trading. This will guarantee I lose as much money as quickly as possible. Unfortunately, trading options requires approval from my brokerage, and I was a little too honest and didn't lie on my application about being a seasoned veteran investor with 10 years of experience. So because I can't trade any options, I would move on to tip number 4, which is the next best thing, trading highly complex leveraged ETFs. These are highly volatile securities that trade similar to options, and some ticker symbols include SVXY, UCO, and UVXY. In order to maximize my losses, I would apply tips 1 and 2. I would stay highly concentrated in just 1 or 2, at most 5 of these highly complex and leveraged ETFs, and I would day trade them as often and as quickly as possible. Last, but definitely not least, tip number 5. I would invest solely off of gut feel so I can lose as much money as possible. I would never ever do any research or read any documents or filings about any of the companies I'm invested in. The less I know, the better. You know what? I would do a little bit of research, which means I would join lots of investing newsletters promising that I'm going to get rich quick with their advice, and communities like Wall Street Bets, and I would take investing advice from any random person on the internet. Whatever they tell me to buy, I'm buying. Whatever they tell me to sell, I'm selling. I would never read any equity research reports or financial disclosures from the companies I'm investing in.
What? Bro, what are you talking about?
So those are my 5 tips on how to lose money in the stock market. Number 1, stay as concentrated as possible. Number 2, trade as frequently and as often as possible. Number 3, I would try to invest in options, and if I can't get my hands on options, I would invest in highly complex leveraged ETFs. And number 5, I would pick my investments based on what other people say and think. Now that we're done with those tips on how to lose money, I promise I would flip the script again and turn those into 5 ways to make money in the stock market. Full disclosure, these are not guaranteed to make you rich, and that's the point. The stock market isn't about trying to become rich overnight. It's about growing your wealth in the long run through compound interest. And all you need to do to benefit from compound interest is to not lose your money. So here are those same 5 tips on how to not lose money in the stock market. But first, if you like this video, please take 2 seconds to hit that like button below and hit subscribe if you want to tell the YouTube algorithm that you want to see more videos like this. Now that that's out of the way, let's dive in. Tip number 1, diversify. Don't just invest in one stock or 5 stocks. Invest in at least 20 to 25 to stay well diversified within your portfolio. And better yet, invest in a diversified market ETF like SPY or VOO. These ETFs hold 500 of the biggest, most successful companies, and if one company goes down, it's just 1/500th of that ETF. And if the market is going up at the same time, you're going to benefit from the other 499 companies that are going up in price. Tip number 2 is long-term investing. Plan to hold your investments for at least 1 year to benefit from something called long-term capital gains tax. As I mentioned earlier in the video, any profits you make within a 1-year period are taxed at your personal income rate. For some individuals, that can be as high as almost 40%. Long-term capital gains tax, on the other hand, is anywhere from 15 to 20% depending on your total income. If you can wait even longer, try to wait for at least 5 years. 1-year holding periods can be really volatile even in the stock market, even in a well-diversified ETF. But over 5-year and longer time horizons, markets generally go up in value. Tip number 3, if I don't want to lose money in the stock market, then I am not going to invest in options. Options are highly risky securities that should only be used in specific situations. These securities should typically only be used by seasoned professionals who have experience managing options in order to protect themselves from a certain type of situation, also called a hedge, or to create an investment position that wouldn't otherwise be possible, such as a synthetic long. Tip number 4, if I don't want to lose money in the stock market, then I'm not going to invest in highly leveraged complex ETFs. Just like options, these products are highly volatile and have specific use cases for seasoned investors. If you're looking to build wealth in the long term, it is not going to be through one of these volatile, highly leveraged ETFs. And last but not least, tip number 5, if I don't want to lose money in the stock market, I will do my own due diligence. If you're going to take a stab at actively picking individual stocks, make sure you do your research before investing. And if you don't know where to start, I would highly recommend researching what an investment philosophy is and what an investment process is. From there, you can find the processes of other large successful funds and investors and emulate that process. An investment process is essentially a checklist of questions that need to be answered in detail before making an investment. Disclaimer here, it takes a lot of work to properly research an investment, and sometimes you may go through this process 5, 10, 20, 50, 100 times before you finally find an investment that you think is worth your time. But hey, nobody said it was easy. So now you have 5 tips on how to lose money in the stock market which you can avoid, and then we went over how those 5 tips can be reversed to help you not lose money in the stock market. Now I'd love to know in the comments, what was your favorite tip? Good luck investors, and I'll see you next time.